Fed rate cut expectations wane, U.S. inflation slows, European stocks slide. European stocks and S&P 500 futures experienced declines on Tuesday following the release of U.S. inflation data for January, which showed a slower-than-expected decrease. This news led to a surge in the dollar and U.S. Treasury yields as investors adjusted their expectations regarding the Federal Reserve's interest rate cuts for the year. Before the data, S&P 500 futures were already down by 0.35% and dropped by 1.12%, while Nasdaq futures decreased by 1.64%. The record-high trading of U.S. stocks, particularly driven by major tech companies, had been influenced by the anticipation of rate cuts by the Federal. Conversely, European markets saw declines, with the Europe-wide Stoxx 600 index falling by 0.92%, Germany's DAX dropping by 0.91%, and Britain's FTSE 100 decreasing by 0.44%. Despite expectations for a lower inflation reading of 2.9%, the U.S. Consumer Price Index, CPI, only decreased to 3.1% year-on-year in January from 3.4% in December. The inflation rate has steadily declined since its peak in June 2022, prompting the Fed to reconsider its interest rate policies. Consequently, the yield on 10-year Treasury notes surged by 12 basis points to 4.291%. The dollar index, which measures the dollar against 6 major currencies, rose significantly, while the euro declined. Investors adjusted their expectations post-data, with a reduced anticipation of Fed cuts by the end of the year and a lower probability of the first cut occurring by May, reflecting the impact of robust economic data on market sentiment. Exchange dollars and more than 30 currencies with us. Register your company at TKambio US and transact with the best exchange rate, backed by Monex US. Subscribe and stay updated with exchange rate news.